What is going on, Fud Nation, and welcome back. And yes, today we have another guest, the man who needs no introduction. If you've ever been on crypto Twitter, the man himself, Tone Vays. Thank you very much to Tone Vays for taking the time to come out and do this interview. Well, I guess digitally come out, whatever, you know what I'm saying. The point is, it's a great chat that we're about to have. And there are some very important words of wisdom that we want to impress upon the audience. Literally strap yourself to something. You're gonna need to hold on. This is a very, very fun chat. For once, I think I have a guest that out-talked me here. Whether or not I agreed with everything he says, I love the way he says it, and I love his role in the community. So thank you very much, Tone Vays, for coming out and being a part of FUD TV. Without any further ado, let's get to it. This is my exclusive interview with Tone Vays. Hello and welcome to FUD TV, the one and only Tone Vays. Thank you so much for being on the show. I really appreciate it, for taking the time. Welcome to the show, and please, if you could, give the audience, if they don't already know, a little bit of background about you, how you got into the space, what you were doing before you were in Bitcoin and cryptocurrency, and what you're up to right now.
Sure. Hey, thanks for having me on. Glad to do the show. I'm going to try and keep this brief, but you know, the older you get, the more of a history you have. I started out as just like a high school teacher, and I really didn't like that profession. I didn't like what I was doing. I went out and got a master's in financial engineering. Now, which is like a Wall Street degree. You go to Wall Street, you become a quant. There's all kinds of things you can do. Financial engineering is a combination of math, statistics, economics, finance, and programming. So like the world is your oyster, basically, in the world of finance with a financial engineering degree. Unfortunately, I had no work experience. So that created a little bit of a trouble getting a pretty decent job. And during that time, I actually learned trading. This was like early 2000s, like 2003, 2004. So that's when I learned how to trade, but I didn't have much money to trade. I did attempt trading my very first portfolio in, so I started out as doing that as a job, and I ended up like destroying my first portfolio because I started shorting the real estate market somewhat heavily in 2006. Thinking that there is a bubble and I'm going to become very, very rich. I ran out of money shorting real estate by late 2006, and in early 2007, I had finally found my first real finance job because I said, you know what, I'm so wrong about trading. Maybe it's not for me. And my first job was at Bear Stearns, the company that went under a year later because of the real estate bubble.
Wow.
So
the irony is overwhelming.
Yeah, the irony has no bounds, right?
Yeah.
So that's how I ended up at JP Morgan after that. And I ended up working on Wall Street for just under 10 years, while on the side continuing with my trading. Learned a lot from my first experience, slowly became a better trader, a much better technical analyst. Worked at JP Morgan, worked at a couple of other companies. My job was always risk analysis, building risk models. Eventually in 2015, I had quit that job to be a full-time trader. But prior to doing that, I also got into Bitcoin around 2013, found it interesting, and leveraged my Wall Street background and started speaking at a conference here and there in 2014. In 2015, when I quit my job, I was already becoming like a Bitcoin personality as a guest on many YouTube channels like your own, becoming a consistent guest. So I was doing this Bitcoin speaking thing and crypto YouTube on the side until around 2016. I opened up my own YouTube channel, became a bigger influencer in crypto. And by 2017, I didn't really have much time to trade anymore. And if you can't focus on trading, it's very difficult. So right now, I travel the world. I speak about Bitcoin. I try to explain Bitcoin to people. And to make money, I teach workshops educating people on how to be traders. Trading isn't going anywhere. I can always go back to it, but I'm really enjoying my travel life. I'm enjoying my YouTube channel where we talk about Bitcoin. I have other shows, talk about the legal side of the crypto space. I interview people. I get interviewed all the time, hence I'm here on this channel. And all of that just takes up an inordinate amount of time. I travel about 10 months a year. and I throw on a trade every now and then, but it's rare. The one big trade I made in the crypto space this year ended up being blown up all over crypto media. I ended up getting banned from the exchange the trade was on. The trade ended up losing me a bunch of money through like if I didn't make that trade public, it would have made me a lot of money. But making that trade public, it created a complete nightmare. So anyway, so sometimes it's better to just keep your mouth shut, and if you're gonna trade, just trade. So I try to do more of that these days.
And so you consider yourself a trading expert. Do you see any bit of a conflict there with teaching workshops when you're not actively trading, or do you think it just has to be one or the other?
I think in a way, you know what? I can debate both sides of that. A lot of times, people that are trading, they want everyone to just follow the trades and get them on their side. It's kind of like the same debate. If you're gonna learn race car driving, is it better to learn it from a guy that's currently driving, or is it better from a guy that happens to have retired already and is now just relaxed and he's happy and he's just teaching you how to drive that car. If you're gonna edit that, I can back up and we can
No,
redo that
no, I like it. I
because
like it.
I had a background.
Totally fine. Totally fine. So yeah, so I guess that's it. I mean, I'm certainly agree with you. You can argue both sides. So it seems like what's interesting about your background is you have quite a bit of fundamental analysis mixed with the sort of expertise in analyzing charts as well, which gives you a nice sort of holistic investment, I guess, background. So it makes you not just one side of the coin, but another. And so I guess what I'm leading up to here is you're probably more of an investor long term than a short term trader. So I guess with that background, what do you think is the most exciting things, positive things happening for Bitcoin and or cryptocurrency in general as we are here in the first month of 2019?
Sure. It's interesting you mentioned fundamental analysis, and a lot of people in the crypto space they confuse fundamental analysis with news events. News events are not fundamental analysis. News events are somewhat random. News events are only fundamental analysis when you have done the research and you are ready for the news event. And my fundamental analysis in the crypto space began and ended with Bitcoin. There was a time in my past around 2014 where I thought altcoins were viable. I am no longer on that bandwagon. That went out the window probably by 2016, where to me, that's it. If you are going to invest in the crypto space, if you're going to put your money in the crypto space, and you're going to leave it there for about 5 years, the only asset I feel that has a chance to be better off 5 years from now is Bitcoin. And everything else will actually depreciate in value. And sometimes I throw this question at people. If I just handed you, let's say, $10,000 or $100,000, would you rather have it sitting in Bitcoin for 5 years and you can't touch it? Or I'll give you double the amount and you can put it in any altcoin of your choice and leave it there for the next 5 years and you can't touch it. And almost everybody picks Bitcoin. And that's the correct answer, right? Like when you put money on the line, everybody picks Bitcoin. So to me, so the question was for 2019, what do I see? I see Bitcoin separating from the altcoin space. That is my current view. I've been a pretty big bear of the current crypto markets, but for me, crypto is just Bitcoin. And whenever I see Bitcoin bounce to the upside and the altcoins are bouncing at a higher percentage, it doesn't even have to be all the altcoins, just a decent amount. Like in this recent bounce, when we went from 3,000 to 4,000, we saw Ethereum go up 100%. We saw Bitcoin Cash go up 100%. We saw some other coins that people have heard of go up 2 and 3 times more than Bitcoin went up. That tells me one very simple thing: the bear market is not over. Because to me, the bear market is going to end when Bitcoin goes up 50%. And on average, other altcoins are going up like 5 or 10, or maybe not going up at all, or maybe falling even further as Bitcoin finally reverses. So that is my outlook. I am hoping this comes at some point in 2019. I don't expect the bear market to last into 2020, but crazier things have happened.
That's very interesting. And I guess, there have been precedents for, altcoins, pumping harder. So I'm curious as to why the altcoins essentially need to be left behind for the bear market to end. Or do you think that's just healthier for the space overall?
I think it's a lot healthier for the space overall. And I would be, again, nervous for the crypto space because eventually when bubbles pop,
Mhm.
they don't come back in the same way. Like when we saw the dot-com bubble finally pop, and it eventually bottomed out. So the bubble popped in very early 2000. It eventually bottomed out somewhere in 2002, 2003. And websites with no money, no clients, no services, nothing but a single web developer, those stocks never came back. They never went up. If this is a real Bitcoin crypto bubble, lessons need to be learned. You don't get to sit on your terrible investment that had no fundamental basis and profit on it. And if we start to go up and the altcoins are going to go up with Bitcoin, that means the original bubble isn't over. And there's going to be an even bigger one and a more painful one down the road. I believe that this bubble has to be more painful than the last bubble. And the last bubble was pretty painful for me as well, because I had quit my job and joined this crypto space at like the worst possible time in very early 2015.
Hmm.
And
It's
that's one
actually
of the biggest things I regret.
it's actually not that bad of a time. In theory, you were getting the basement prices on the next bull run.
But here's the thing, right? When you quit $100,000+ job, it's irrelevant how cheap Bitcoin is if you have no income coming in to buy it, right? So the mistake was quitting the job. All I had to do was hang in there and be
Hmm.
miserable one more year and convert all of those
Hmm.
fiat paychecks into Bitcoin. And I had other things lined up. I had like other business plans lined up. I invested in some businesses in the crypto space.
Hmm.
I invested in a brick and mortar. I thought I was going to be a business owner, wanted to just like not work for anyone. Those turned out to be somewhat bad investments. I should have just hung on to trading, but that was the mistake.
Hmm.
And that one was pretty painful for me. I remember it well. And I think this one is going to be even more painful, especially for those that chose wrongly in putting their money in Ethereum and Bitcoin Cash and God Dash and God knows what else.
So let's. I think.
Ripple.
I think that's a great segue into the next part, which is looking at Ethereum, right? Which obviously ballooned off the promise of decentralized infrastructure, ballooned off the promise of decentralized web, and of course the infinite promises of the ICOs and DApps that were built upon it. You have stated pretty emphatically that Ethereum is going to zero. And I want to talk about that now. Sort of what's the background and the basis for Ethereum going to zero? And do you believe to any extent in decentralized infrastructure benefiting the crypto economy?
Sure. Now, obviously, nothing ever gets to zero. Unfortunately, even BitConnect, which has been proven to be a Ponzi scheme, still somehow magically trades at like $1 or two or whatever it trades at, right? But it's
Magic.
functionally zero. The majority of the people have recognized that
Hmm.
the coin is useless. I don't know. I don't know how long you've been in the crypto space, but I remember when Aurora coin was number two on coin market cap at
Hmm.
$100 a coin, and it's now trading at about a penny. Paycoin was number three on coin market cap. Turned out to be an outright scam, and Judge Garza went to prison. But that coin still trades at like, I don't know, 5 cents, 10 cents, who the hell knows.
Hmm.
But um, realistically speaking, Ethereum, and I have a YouTube series on it. I still need to do part 4. Ethereum suffers from 4 very critical problems. I've covered 3 of them. I haven't gotten to the 4th one yet. So the first problem of Ethereum is, of course, regulatory. Ethereum is an ICO, no different from the ICOs that are somewhat still happening today. To me, almost every single ICO, almost every single one, there's a minor exceptions there, but almost every single ICO is an unlicensed, unregistered, uncompliant security. Now, the SEC has somewhat agreed with that, but not necessarily in the case of Ethereum, and that's Ethereum's second problem. But anyway, so every single ICO is at risk of a regulatory crackdown, because to do an ICO, you need a company, you need advisors, you need promoters, you need to pay the developers. It's basically a centralized entity issuing a token. And if there's a centralized entity issuing a token, there is an entity that the government can hold responsible for that token. Now, I believe this should have happened to Ethereum years ago, and the SEC has dropped the ball, and it opened up this insanity of other ICOs built on top of Ethereum, which is Ethereum's only use case, replicate what we have done by getting a bunch of funding from unqualified investors. Now, the reason why the SEC is somehow mistakenly saying that Ethereum is decentralized is because they don't understand the technology of Ethereum. And this is where Ethereum's second problem comes in. People think that Ethereum is somehow decentralized. It's not. One of the things that makes your token decentralized is the number of nodes that people are using around the world to validate their own transactions. Now, the other thing is, of course, the mining structure. Ethereum still has the mining structure, which they're desperately trying to eliminate to make their coin even less decentralized. But I'm not sure if they will be able to or not. The jury is still out. But even if it stays as a mining blockchain, because if they go proof of stake, it's not even a blockchain to me anymore. It's only a blockchain as long as you're proof of work, in my opinion. So, but even if they stay as a proof of work blockchain, the number of nodes they have is increasingly dropping because the amount of data being stuffed into this blockchain is just unreasonable and unscalable. This makes Ethereum started 6 or 7 years after Bitcoin started, and Ethereum blockchain is 2 or 3 times bigger, growing at a much faster rate and at an exponential rate. The only thing that has slowed down the growth of the Ethereum blockchain is the fact that Ethereum now has a bunch of competitors like EOS and maybe Tezos and Waves and Cardano and God knows what else is going to come out, because it's totally irrelevant for an ICO which database they are using in order to move their coin around. In fact, if you are going to launch an ICO, which to me is an unlicensed security, which is why the terminology is moving from ICO to STO, a security token, like that's going to make it much different. They need stability of the underlying database, and Ethereum is not providing them that stability. It's totally irrelevant if Ethereum is or isn't decentralized for the purposes of your company moving around your token. And that's why Ethereum is totally fungible, and you can move your token somewhere else, or you can issue your token on another blockchain. So technologically, Ethereum is not decentralized. It's totally unstable. Next CryptoKitty launches, it doesn't function. So it has a regulatory problem, technological problem. There's 2 additional issues to Ethereum. And I already led into it with why does the world need decentralized smart contract? A smart contract is a self-executing code contract. Decentralization is one of the most inefficient, terrible tools we have in the world to do anything. That's why nothing is done in a decentralized way. Even movie sharing, file sharing, movies, music, documents, that used to be the holy grail of decentralization, but it has become easier not to use Tor, not to use BitTorrent. It's become a lot easier and a lot cheaper to just pay $10 a month to either Spotify or Hulu or whatever and get all the movies you want anytime you want. You don't have to waste your own storage space. And like the technology is making the decentralized file sharing irrelevant because the market is offering this to you at a cheaper, faster, better quality, no viruses, no problems, because there was, companies responsible because they're trying to get your business at a cheapest possible price. So this notion that decentralization is somehow needed in contracts that are legal and supported by most governments is crazy. Something like Google will do a much better job executing your contract unless there's something very, very illicit in that contract that requires decentralization. So to me, this idea that decentralizing something that doesn't need censorship resistant is a complete gross inefficiency, and that inefficiency eventually is going to go away. The way we're seeing, pirated songs and pirated movies are slowly going away because it's just becoming easier to pay for it in a cheap way. And the final problem with Ethereum, and this is the only one I haven't covered yet, and remember, all of these things that I'm saying, they apply to every single altcoin. Maybe not all of them, but at least some of them. And the last one applies to a lot of them. If you're going to build a platform that's providing a service, and remember, Ethereum is providing a service. It's providing a service of executing a smart contract. Here's what you don't want from an economic perspective. You don't want to invent your own money and force people that want to use your product to pay you in your own money. If this was useful, we would all be paying for a product on eBay in eBay stock that is fluctuated and is constantly has a huge volatility rate. You don't know what the price of it is any given second. Now, this was absolutely necessary for Bitcoin because Bitcoin was trying to create new form of money. And you needed Bitcoin to be that. But everything else that is providing you a service doesn't need to create and print money out of thin air in order to provide it to you. So in the future, there's absolutely no reason if the first three parts of Ethereum are somehow resolved and it's not in violation of any security laws, and it is technologically scalable, and it is useful to decentralize smart contracts. Even if I'm totally wrong on the first three, someone is going to just take the Ethereum code, they're going to stick it on top of Bitcoin, and they're going to offer it to you in a currency that wasn't made up out of thin air, a currency that everybody has. Again, this is the eBay example. And if you're going to buy something from eBay and you are forced to use eBay stock to buy it or eBay currency to buy it, how do you go and get that eBay stock? Well, you got to go to E-Trade and buy it from a broker. Great. Now, E-Trade says, hey, you can't just pay me in dollars. You want to buy eBay stock from E-Trade, you better go and buy E-Trade stock, because in order for you to use E-Trade, you have to use E-Trade stock. So you the same done.
Sorry, you just you cut out for a split second there, but we got most of that magical rant there. So I agree with you on some points, and I also want to push back on a few things. One of the main things is that people are investing into something for profits, right? And that is something that is probably true of most cryptocurrencies, just based on the community. However, there are networks that are trying to create essential digital assets that have use within a network. And so I guess what I'm worried about what you're saying is that you're just saying that all digital assets are illegal to sell, which I think is something that I believe personally will be struck down, because it's not illegal to create a digital asset and to use it for an ad hoc, very specific purpose. Now, obviously, selling the promise of something in the future that's going to explode in value and going to make everyone a ton of money, that would be obviously promising in an investment scheme. But there are live products that are selling digital assets or tokens to use their networks and to access their services, just like Dave & Buster's gives you tokens to play their video games, and you can't play them without it. So I guess there's sort of a line
there.
Those
are pegged. Those are pegged. They don't have. There's two issues there. So, like in something like Dave & Buster, first of all, they're pegged to the currency of that country, probably the U.S., unless they're in foreign countries. And not only are they pegged, they don't have an unregulated exchange market where you can go and speculate. No one is speculating on those tokens, right? So, and one of the reasons is because they're pegged. So that's one of the big differences.
Well, so I guess if you're describing something limited in quantity that has a fixed supply that can be traded on a third-party market, wouldn't Yeezy shoes be considered a security, or Michael Jordan shoes, or something like that?
Well, not necessarily. Well, is it considered a security? Well, it's that's actually a good question, but those are specifically collectibles, and well, no, because when they were issued at the time, those Michael Jordan shoes, right? And remember, the quantity on them is not necessarily, it's limited, but it didn't have to be limited. Those became collectibles, which is a good argument, right? You can argue that Bitcoin is a collectible. You can argue that these other coins are collectibles. I think it's an argument people will lose in court, but you can argue it. I mean, and by the way, this crypto space is probably, like, when it's all said and done, this could have ramifications on, let's say, baseball cards. This could have ramifications on stamp collections, right? Like, we don't know where the laws are going to go. So it is possible. But as far as the digital side of it goes, I'd love for you to throw an example at me so we can explore it, because I have not seen anything in the old coin. Well, actually, I shouldn't say that. I have seen two examples in the world of ICOs where I find those tokens to be legitimate, but they're terrible speculative investments. But those are my only two examples. One of them is an ICO, and they have technological risk. Anytime you build your currency on top of Ethereum, anticipating that Ethereum can't just collapse and disappear tomorrow is a huge mistake. So eliminating the technological side of that decision of sticking your utility token, let's say, of sticking your utility token on top of Ethereum, let's remove the technological risk, which I would never take on, but somebody else has. The only two examples so far I have seen that are legitimate, and I want to preface that by saying these are terrible investments. Do not buy these tokens. Just because something is legitimate, it doesn't mean you should go out and buy it. I mean, I can name you 5,000 penny stocks that are legitimate. It doesn't mean you should go out and buy them, right? I can't name them out of my head, but I can go and Google penny stocks, and I have 5,000 names. They are all legitimate companies because they're legally able to trade their penny stock. Are they good investments? Absolutely not. Is the guy that's telling me that some 3-cent stock is going to take over Google by next year, is he trying to scam people so you can exit that penny stock? Probably, right? That's the obvious conclusion. So my two examples of ICOs that are terrible investments but legitimate, one of them is is a VC token. Basically, a legitimate VC that is licensed as a VC, not some crypto guy that came out of nowhere. You have a legitimate VC that has established credibility in the VC space, even pre-Bitcoin, let's say, right? And they decide to take a small pool of their next round of funding from accredited investors, and this is what they actually did. I'm not going to name the token, but just as a concept.
Well, yeah,
you raise 90 million.
That's a security by definition, though.
No, well, it's actually, it might be a security, but it's a way to make a token that is not scammy, is where I'm hinting at.
Sure,
whether it's a security or not.
Sure, but from a regulatory perspective, that is literally the definition of a security, that you're taking in a round of funding promising returns from a centralized centralized body. The game here, I think, or the crux of this argument is there such a thing as a digital asset that serves a purpose that is not an investment vehicle? And I think that that's kind of the crux of the argument that I was trying to get to.
Sure, I can give you my other example then. Yeah. And my other example is a, what do you call it? What's the name of it? Oh, give me a second. It's a membership token, for example,
Correct.
Right?
Yeah, great.
So a membership token has utility, but what you have to remember about a membership token is there's no promise of a limited supply of these tokens. They can issue as many of them as they like. It's an issue, so for example, like a gym membership, right? So to me, you need to use a blockchain for something. The blockchain allows you anonymous holding of a token, and there are so many things that we are registered for as members where it's none of the business of the other party. Like the gym doesn't need to know who you are. The gym doesn't need to know your identity. So if a gym wanted to sell you a membership token and avoid the entire know my customer, maybe there is a law that says every gym has to know exactly which person shows up and who they are, but I don't think there is a law like that.
Well, so if they just need to sign waivers because they don't want to get sued when people drop a weight on their face. But other than that, I don't think.
Right, but again, that is something that you can do digitally. Every time you walk into the gym, right, you have the token to enter that gym that you have purchased. You can digitally sign the waiver as I walk into the gym. I give up this right and that right and that right? And it can be a digital signature that can prove that you're the one that did it if something happened in that gym to you, right? Mm-hmm. So that is an example of a digital token. Now, does that digital token have some kind of a, can this digital token, move around in price a little bit? Sure, because then I can sell my membership to someone else. Mm-hmm. But it's not being used as money. It's not being Correct. Used as an investment. It's not like, hey, I'm going to buy into this membership just so I can resell it in the future for more money. There's no expectation of that. You're one of the few people that actually believes it, because the entity can open more locations. They can issue as many memberships as they like in order to keep their business. There actually is a model like this, but it's in the club space. This doesn't really work for a gym, because once you walk into a gym, there's nothing else to pay for. But it works for like a club, because when you walk into a club, you still have to pay for drinks. It's like a membership to get in, but then you still have to spend money. So the club wants you to send it to a friend to go. So these are like very, very niche cases. Mm-hmm. But that's not what we see here. What we see is the issuance of these tokens in order to raise a bunch of money to maybe create something or not, or and everyone that's buying these tokens has no clue what they're buying into. It's always been like, hey, I can resell this to the next sucker at a higher price, and I'm gonna keep hyping it up. There are, like I said, there are very, very few things where that it's not an investment. You're not buying it to make money on it. You're buying it for some kind of a use case that is already active. There's already customers. There's already things for you to use it. And Ethereum didn't do that. Ethereum sold you an IOU. Give us a bunch of money. We're gonna do something in the future, maybe. God, like the fact that Ethereum actually launched something, which they almost didn't, is what started this mess in the first place. And that's the outlier. Like 90% of these things never happen. Like, how many Indiegogo or Kickstarter campaigns have you paid into, and how many of them ever brought that product to market? And they had a product. They've built a prototype. They've spent money. And they still can't take that product to market. Mm-hmm. Yet, for somehow in this digital space, the ideas are 100 times crazier, 100 times harder to achieve, and yet people believe in this nonsense.
Yeah, actually, a bad example, but my buddy from college started the MVMT watch company on Indiegogo, which is now got sold for almost $100 million to I forgot who bought them last year, but it does happen. But I think people misunderstand the risks of entrepreneurship in general. You're absolutely right. But I do like how you offered that caveat that in the end, if something's active, there is an ecosystem to spend and use these tokens, and that the products and services are what you're accessing, that there has to be, some reasonable understanding that you can create a digital asset that's not a security if it's part of an ecosystem that's functioning, whether it's a gym or a video game or something like that. So I appreciate that caveat. I think we've hit the nail on the head. Ethereum, guys, you hear it. Tone Vays says it's going to zero. I don't know about zero, but I certainly have been quite bearish on this channel in the past. What do you think are some other things that you really hope the crypto community en masse at large, people new to the space, old to the space, would get their heads wrapped around here in January of 2019? What is the most important message that you could send out to the crypto family?
I think the most important message is to understand why Bitcoin, like understand why we have Bitcoin, understand what the innovation here is. The innovation was Satoshi solving the double spending problem in the world of computers through the concept of proof of work mining. That was the innovation. The only real use case for this so far has been value transfer. Censorship-resistant value transfer, which we actually need. We actually need censorship-resistant value transfer because every payment we have made prior to Bitcoin was at risk of censorship and confiscation and inflation and God knows what else. And that was the innovation. So anyone that's trying to, and it was difficult to decentralize it. And Bitcoin is doing its best job of decentralizing. Every other altcoin, every other crypto that wants to challenge Bitcoin, you have to understand that it's basically inflation on top of Bitcoin. So if you care about the fact that Bitcoin is giving you inflation resistant value because that property matters to you, then any altcoin you believe in is diluting that property. It's inflation on top of Bitcoin.
Mm-hmm.
If the fact that your crypto asset is unconfiscatable and censorship resistant of transfer matters to you, then you have to realize that Bitcoin is the most secure digital token we have. And it's the most popular, and it's the most used. So once again, if you're entering the space for the long term and you're investing in another alternative, you're basically saying that I don't care about security. Like, that's not important to me. But it should be. So everything else is basically penny stock trading. If that's what you're into, then that's fine. If you want to trade all of this altcoin stuff, if you want to trade these crypto assets and make more Bitcoin or more dollars, great. I have no problem with that. That's why I teach people to be more responsible traders. What they trade is up to them, not up to me. The assets that they trade is up to them, just like the time frame that they trade. They want to be day traders, swing traders, position traders. It's up to them. So I think the one thing I try to explain to people is where the innovation is. Why are we trying to change the world with Bitcoin, and why it's going to be Bitcoin when it's all said and done? And everything else is just there for speculative purposes. But Bitcoin is different. Bitcoin is actually challenging fiat currencies. It's challenging gold as a store of value because it's less confiscatable than gold is because of its properties if you're properly securing it and understand technology. So it's challenging on a higher level than all of these other altcoins. So the difference between Bitcoin and everything else in the crypto space is as vast as the difference between Bitcoin and everything else Bitcoin in the financial space. And that is the message that I want people to understand and research as to why that is.
Thank you for that as well. I appreciate that. Everyone, if you didn't get that, rewind about 5 minutes and watch this little rant again, because I think it's very, very important. Understanding why Bitcoin maximalism exists, understanding why people feel so dedicated to the innovation that was Bitcoin, that is Bitcoin. Very, very important rant there. So take that in. I agree with it to a large extent. I'm also in the camp, as you might realize, that I do believe that there's other innovations coming within this space. But yes, of course, the main message is if Bitcoin is on a risk meter a 7, then these are on the risk meter a 700. They're infinitely more risky than an already very risky asset class. So it's important to understand those levels of risk. But of course, therein lies the asymmetric reward sort of type of situation where you can actually make $100 from $10, which outside of Bitcoin and cryptocurrency is very much so not possible unless you're playing the jackpot slots over in Vegas. So I think sorry.
No, so sorry. I was gonna zoom into your word innovation for a second, and like there's levels of innovation. A car, the invention of the car, of the engine, that was innovative. The next 100 years of building a better car is not as innovative as the original car. The invention of human flight is innovative. The invention of building a better airplane is not as innovative as the very first one, right? Bitcoin is the innovation. Everything else is simply advancement. And building a better Bitcoin is not innovation. It's a giant insecurity. The best thing you can do is build your innovation on the most sound ground until maybe in another generation, in another 20, 30 years, there'll be another technological leap that surpasses Bitcoin. But it's not going to happen here. So if you are going to build something innovative, if you are going to build some kind of smart contract system that's going to help decentralize the stock market, for example, and maybe that's found to be more efficient. It needs to be built on top of Bitcoin, making Bitcoin that foundation layer. Nobody invented a better internet and succeeded. Everyone was building on top of the internet. Like even China with their firewall doesn't have their own internet. They're still using the same internet around the world. They're just putting barriers onto it. Like you're not going to invent a better Bitcoin because the first couple of years of Bitcoin's existence of people putting their heart and soul into it was zero. And everyone knew it was worth zero. Like that's just not replicatable ever again. And it matters.
Well, I thank you again for that. Some extremely, extremely wise words, fiery and wise at the same time. I thank you so much. I want to bring attention before we close this out because it's been a wonderful chat so far. You do have a conference coming up. Please let my audience let them know about what you're doing and, of course, how they can participate.
Sure. Yeah. So I've been to so many conferences. I speak at about 20 to 30 conferences a year. And I decided to put together my own where I have a say in the speakers and try to make that an annual event. It's taking place next weekend in Las Vegas. It is called Unconfiscatable. I find it to be the most critical property of Bitcoin. I was very happy that I was able to get the domain because it wasn't a word before. And I believe it's going to be a word because for the first time in human history, Bitcoin has provided us the property of having something of value that is unconfiscatable if properly protected. And the conference is called Unconfiscatable. It's accompanied by 100 people poker tournament for mostly Bitcoiners with a bunch of Bitcoin celebrities. It's taking place January 24th to 26th. The conference day is Saturday the 26th. Our poker game is the night before. I am teaching my trading workshop. Jimmy Song is teaching his developer workshop. A man named Tyler Jenks is teaching an investment workshop. He has over 40 years experience in money management and retirement fund management. And the conference tagline is Bitcoin, not blockchain, where we try to explain these kinds of concepts. And I can't wait to go there and be part of this conference myself, even though I was one of the people that put it together.
Amazing. Thank you so much for coming on. I know you have some VIP tickets lined up for my audience, so we'll have to check back with you about all that. Thank you again for your time and, of course, your very valuable perspective. If you guys have not been living under a rock, go follow Tone Vays on Twitter. Go check out his YouTube. Once again, thank you so much for your time and energy, and I appreciate you coming on the show.
Thanks a lot, man.
Now, we actually went on for another minute after this to talk about privacy coins, something I know that you all care a ton about. Specifically, we went on to talk about Mimblewimble technology and GRIN coin. And wouldn't you know it, based on the conversation that has just preceded this, that Tone Vays isn't really a fan of Mimblewimble technology and GRIN coin. Brain explosion. Anyway, the point is, Tone Vays has a very strong belief that everything that needs to happen within the cryptocurrency world will happen. Whether it's privacy features or otherwise, it will be built into Bitcoin. This is a reason why Tone does not believe that Mimblewimble or GRIN coin are going to be meaningful in the long term, short or medium term. Second of all, as far as Mimblewimble technology being interesting, well, I'm not going to comment on that so much as the fact that GRIN coin has really been talked about as a fair launch coin. And what they mean by that is that essentially there was nobody that had any advantage in mining it or staking it or whatever way you could get an advantage in a coin supply. However, that's not really true, as there were huge VCs setting up multi-thousand CPU mining units to mine GRIN coin from the Genesis block. So I don't really think it qualifies as a truly fair landscape for a coin. Anyway, I think people have been really overhyping GRIN coin, and so whenever you see that much hype behind a project, I think it's an absolute reason to throw the brakes on and wonder exactly why. Certainly don't buy in when it's absolutely mooning. Same can be said about the Apollo coin, which is dumping now, another privacy coin. I honestly have not looked into Apollo too deeply, but I can say that I would never buy something that's going up at the rate that Apollo is going up. With a bear market trend being the overall trend, that gravity will pull all coins down in the long run, especially one that's seen such an unnatural and really unparalleled rise as Apollo of late. So to me, as far as Apollo and GRIN, it's a no from me, dog. I hope that doesn't hurt any feelings out there. I hope you guys all make a ton of money if you have invested into these coins. But when I see rises like I've seen in Apollo, and of course, when I see sort of coins that, it doesn't always quite fit together, I too believe that privacy will be built in on a second layer to Bitcoin. I'm a big believer that second layer solutions will save Bitcoin, will really bring Bitcoin to the transactional level, the privacy levels, all of the features that we want Bitcoin to have can be improved upon and built into the second layer of that blockchain. That's my personal belief. I could be wrong, but that's how I feel about it. I apologize that I wasn't able to capture. I had a recording error here that I didn't notice until after the fact, so I missed the little part of our chat where we talked about Mimblewimble, but I promise it was a phenomenal one. Make sure to pick up some tickets to Tone Vays' convention, Bitcoin, not blockchain. I personally don't agree with that, but I find Tone to be a very educational and very interesting character in the space, and I thank you so much for coming on the show. I hope you guys enjoyed it. If you did, leave us a comment in the comment section below. Let us know what you thought about it. Smash up those likes. It really helps the channel. It helps support us, your good friend, Elio Trades. Hit that little sub button, and of course, click that bell notification. That way you're made aware whenever I put out new content. As usual, I'm Elio Trades. You're watching FUD TV, and I'll see you very soon on the next episode.